stablecoins were once viewed mainly as tools for cryptocurrency trading and speculation, but that perception is rapidly changing as businesses, financial institutions, and payment providers increasingly explore their real-world use in payments and money transfers, from cross-border transactions and remittances to faster settlement and lower transaction costs. Stablecoins are beginning to reshape conversations around the future of digital finance, particularly in emerging markets like Africa. Joining me now is Lasbury Oludimi, which is MD, Yellow Card Nigeria. Great to have you on the show. Lasbury, I know it's because of the rain you couldn't come here to the studio.
Thank you, Ladi. It's always a pleasure to be here.
Fantastic. So we're seeing stablecoins have long been, associated with crypto speculation. How are traditional businesses and consumers reacting and adapting, now that it's become a legitimate payment solution?
Thank you so much, Ladi, for the question. I think currently the conversation has actually shifted from speculation to real-time utility, right? People are no longer using stable coins to buy Bitcoin or maybe waiting for the rates to increase before they can trade. Rather, businesses are now looking at stablecoins as a practical solution to some financial problems. And just looking at where we operate in, especially within the B2B side, businesses are now adopting stablecoins to manage their treasury. Businesses are adopting stablecoins for invoice payment. And both businesses and individuals are also adopting stablecoins for cross-border transactions. So we're no longer speculating, but there are real-time use for stablecoins, and both businesses and individuals are adopting it.
Right, and we're also seeing global payment companies and financial institutions, enter this space more aggressively. What does that signal about where stablecoins and digital assets are heading?
Ladi, that actually signals some level of maturity, right, within the ecosystem. Stablecoins, digital assets is now moving mainstream. Like I said before, no longer speculative tool. So for now, the financial institutions, the big organizations are coming into the space, especially those of them within the payment sector, because they have seen a need for stablecoins. And they all understand that the payment infrastructure we have is somehow fragmented, and there are a lot of issues. And they have come to realize the use cases of stablecoins and how stablecoins can actually help them improve their payment rails, how stablecoins can help them increase speed, how stablecoins can help them reduce the cost of cross-border transactions, and how stablecoins can also help them with liquidity, right? We already have those payment rails, no doubt, but there are a lot of issues. And for us to really improve this rails, then there is a place for stablecoins, and that's what these financial organizations have come to realize. And everybody is being aggressive, everybody is interested in the conversations around stablecoins. Just last week, I was in Kenya for GITEX Kenya, and I was on a panel with MasterCard, DTB, and other financial institutions, right? Everyone is interested in this space. Everyone is looking for, how can I improve my product offerings? How can I improve my services? How can I improve my rails? How can I improve what I already have, right, with stablecoins? And it's also exciting to have conversations with this financial institution, have conversations with even the commercial banks, right? Everyone is interested in the space. Everyone wants to be part of this ecosystem. Everyone needs a pie. Everyone wants to have a pie, right? So the conversations are becoming more interesting, more exciting, and everyone jumping into it because of the use cases. There is something you need to do with stable coins.
Right, but looking at
within the financial system, there is always something that they have to do with stable coins, and they are all exploring that.
All right, talking about excitement at this point, I did mention some banks right now, and I want to believe when it comes to remittances, some of these, cross-border transactions, that is supposed to be bread for commercial banks. Are they truly showing excitement about what's happening with stable coins?
Yes, Ladi. Like I said before, we already have the financial rails. Currently, we do cross-border transactions. We do invoice payments through the banks, right? We also do some sort of treasury management through the banks. But there is a lot of delays because of the correspondent banks. If you're sending funds from here to Ghana, Ghana is 1 hour away from Nigeria, right? So if you're sending funds from here to Ghana, the funds will need to go to the correspondent banks before it gets to Ghana. So what the banks are looking for is, how can I make this transaction just straight from Nigeria to Ghana without the correspondent banks? Right? The rails are there, but what the banks are looking for is how to improve the rails, how to improve their services. We all do invoice payments, right? We have suppliers that do have partners in China, and they have been paying their invoices, but there are some pain points. One is the liquidity, right? For stablecoin has come to provide that liquidity that we're all looking for. If you look at the markets within the sub-Saharan Africa, there are a lot of markets that are struggling with foreign currency liquidity. And that's why we have stablecoins. So the banks want to take advantage of this liquidity pool and be able to have those transactions without issues. Look at cross-border transaction. How long does it take you to send funds from Nigeria to Ghana? That is just 1 hour away. That even if you want to carry cash, if you're permitted to carry cash, you just need 1 hour and that transaction will be completed. But because we are not allowed to carry huge funds around, they are making those transactions through the correspondent banks that take days, right? But with stable coins, you can actually make transactions, you can make those same transactions in minutes. So what banks have come to do, or what banks are asking, is how do we take advantage of this stablecoin infrastructure to improve the speed, to improve costs, and also to improve our liquidity pool? And that's why everyone is excited talking about stablecoins. That's actually where their interests lie.
Right. I guess the banks would, try and get their bread from this new platform at this point, even if they lose out on, other parts. But we're seeing the likes of, MasterCard also, coming into this space aggressively. What does this signal, in your opinion?
I think it's all about collaboration, right? I think for the partnership between Yellow Card and MasterCard is actually to improve their payment system within Africa, relying on our stablecoin infrastructure to ensure that they make those payments with the speed at a reduced cost and also have the liquidity they need. For the financial institutions, organizations like MasterCard coming into the space, it also shows there is something they can benefit from this ecosystem. It shows there is something that is broken within the financial system that they are already part of. And it also shows that stablecoins is actually to solve for that gap, right? And for us to really have these organizations play within this system, it means the ecosystem is actually growing. It means maturity, like I said before. And it also means that they have seen the use cases, they have seen the benefits, and the only way they can actually come into this ecosystem as quickly as possible, right, is not to build their own infrastructure, is not to build their own stablecoins infrastructure, but to partner with people like Yellow Card, who already has this stablecoin infrastructure, and they're able to plug in and make those cross-border transactions at a reduced cost with high speed, and also get the liquidity they need within the African continent. So everyone is jumping into it, and it's because there is something here. So they have us in it, and they want to take benefit of this opportunity to do it.
Right, and talking about everyone jumping into it at this point, at the end of the day, this is technology, this is network. So I try to imagine, we've seen what happened with algorithmic, stable coins. That didn't work out, well. But so far, we've seen, most of the other stablecoin platforms stay stable. But I'm just imagining we've all jumped into stablecoin networks, at this point, and something happens, and all these networks just collapse. what happens next? Do we have backup, at this point? What's the role of regulation in this?
Okay, so Ladi, this is actually the place of regulation, right? There are other businesses that have been built and they have all collapsed. So this is not, it's not only within this digital asset space. There are other businesses, there are other services that have been put together, presented to the public, and they didn't make it, they didn't see the light of the day. But what we need at the moment, Ladi, is to have a strong regulation that will speak to consumer protection. So if there is any issue at the end of the day, there is already a statutory procedure to follow to ensure that whoever that has funds or whoever that is dealing with the stable coins or dealing with the digital asset is able to get value, right? So what I would say, Ladi, is there are so many businesses built. I have not seen the light of the day. It's not just particular to the ecosystem, the stablecoin ecosystem. What we really need at this point is to have a regulation that is fit for purpose, a regulation that is focused on consumer protection, a regulation that defines the parameters for organizations, for platforms. To what extent can you play? What are the requirements? What do you need to come into the ecosystem, right? That would also help us to put the bad eggs out of the way and ensure that only people that have come into the ecosystem to do business, to offer services, are given that opportunity to prove their innovations, are given that opportunity to show what they have built, and also given the opportunity to play within the financial sector.
Okay, so looking at the major stable coins right now, we have the likes of USDT, USDC, and the likes. When Nigerians use these, that means we're kind of like importing. We're importing. That's, in my head. When do we have the likes of, e-Naira, even though I've not heard anything about the e-Naira so far, but there's also CNGN. Where's our stable coin in all of this?
Okay, let me give more context to this, just for people that don't understand the differences. So the e-Naira is a central bank digital currency. That is basically the digital value of our Naira, digital value of our notes, right? And is issued by the central bank. Then the CNGN is a private issued stablecoin, a private issued local stablecoins. What that means is fine is stablecoins, but it's pegged to the local currency, which is Naira. And the issuer is a private organization, right? And for them to really operate, they need some sort of licensing or backing from the regulator to operate, right? Then the likes of USDT, USDC is also a private issued stable coins that is pegged to the US dollars. So you can see there is a similarity between the CNGN and the USDT and USDC because they are both privately issued by organizations. And the difference there is the jurisdiction. The difference there is the currency, right? The USDT, USDC is pegged to the dollars, while the CNGN is actually pegged to the Nigerian currency, which is Naira. So both stable coins are totally different from the central bank digital currency, which is a representation of our local notes. I don't know if that makes sense.
Yeah, that makes sense.
When you talk about stable coins, you're not talking about the central bank digital assets.
Yeah,
no,
the CBD.
You're actually talking about the
CBDCs,
CNGN,
right.
You're talking about the USDT, you're talking about the USDC. Then when you talk about what do we have in Nigeria, that is actually the CNGN because it's pegged to the Nigerian dollar. But because of the use cases, the liquidity, the audit trail, the trust requirements, and also the
All right, seems the network, yes, I did mention it earlier, it's a rainy trading day, and obviously we know how the rains affect the networks. Yeah. All right, Lasbury, but thank you so much.
Actually the difference between the digital assets.
All right, fantastic. I was able to, make sense of that. So you have the CNGN, you have the e-Naira, you have the CBDCs, and you have the privately issued stablecoins. Thank you so much. We'll definitely keep tracking this to see how the future of finance continues to evolve. Thank you so much. Lansbury Oludimush is the MD, Yellow Card Nigeria. Thank you for coming on today.
Thank you so much, Ladi. It's always a pleasure to be here.